Are you somebody who is afraid of math or just has given up on the fact and said, I'm just never good at it and will never be good at math? Well, what if that idea ultimately can cost you money? Because sometimes those ideas do go hand in hand. And sadly, I think there's people in our world that like that to happen. They want people to be bad at math, they want people to lose money. And my idea I want to share with you today is something that I give a little bit of advice to all of my buyers whenever I close a deal to help them, in essence, potentially save ultimately thousands of dollars if a small little trick is done from the outset of starting a new budget with a new mortgage. So what I want to look at is when you close on a mortgage, they give you a an idea called an amortization or amortization. I'm not sure the correct way to pronounce it. That really doesn't matter. But what that does is it breaks down um, with every payment of a loan or a mortgage, um, how much it breaks down for the principal and the interest. So let me just do a quick example here. If I have a $150,000 house, we'll just, for example, say a 30-year mortgage, and we'll say a 3%. And I'm just making these up quickly. I can calculate that, and my monthly payment will be $632. But this is something a lot of people don't realize, and this goes back to the idea of not being good at math, is over the course of a loan, okay, you're paying $150,000 for a house. But in actuality, if you make every payment through all 30 years, you're going to, in essence, pay $227,000 and more for a $150,000 house. You're paying interest that's almost $78,000 in interest. And some people just say that's the nature of how a mortgage works. I can live with that. Well, I'm somebody that can't live with that. I learned this trick a long time ago, and I try to apply it whether it's with my house, with a car, with anything I buy on credit. And there's a little trick you can do on the same website, calculator.net, and it's called you can make a mortgage payment calculation. So I have my same example here, $150,000 house, 30 years, 3%. What if I make a little extra payment every month? So what I often tell my buyers is when you're making your budget for your new home, figure out a way that you can add a little bit more to your payment. So in essence, you maybe can make an extra payment over the course of a year. And if you do that, it will drastically pay off your mortgage faster. This website can actually demonstrate those numbers for you. So for example, if during the month I simply want to add an extra $50 to my payment. So in essence, my payment will go from $632 a month to $682 a month, roughly. What does that do to my overall payoff of my mortgage? I can calculate that. Now remember, the initial was $632, it's now $682. But look, I actually save $9,700 in interest. So by just increasing my budget a little bit by $50 a month, I'm drastically impacting how much money I can save over the course of my loan. Well, you can actually, what if I increase it by $100 a month? And again, not everybody can do that, but this is kind of neat to play with the numbers and see what can come out. Calculate that. If I add an extra $100 a month, so my payment went from $632 to $732, I'm saving $17,000 in interest over the course of my loan, and I'm paying it off 6 years faster. So it went from a 30-year loan to a 24-year loan. To me, that's a simple, basic idea of math that can save thousands of dollars. Like I said, this saves $17,000 by just increasing your budget by $100 a month. Again, whether or not that's possible with everybody in the situation, it's dependent on everybody has their own budget and their own affordability. But if you do this from the outset, it just becomes your normal payment, and you think, okay, I'm going to make a payment of $732 a month, and then over the course of your loan, you pay it off in 24 years versus 30 years. So I share this idea with all of my buyers just to kind of get them on maybe a good path so that they're not paying off their loan over 30 years. They actually can pay it off faster. So again, this website, calculator.net, lets you play around with those numbers and see how maybe you can pay your mortgage off faster. And this can apply to car loans, anything that is financed. You can come in here and play around with the numbers and possibly pay off your mortgage faster or your loan faster, and ultimately the goal to save money. So good luck, and I hope that this helps people not be afraid of math, and better yet, understand that you can and probably should save money by just doing a simple adjustment to your budget.